Confidence pushed into positive territory, which means more people are in the market for newly built single-family homes. This comes as we've also seen a recent increase in home building, and joining us to tell us what this all means is Ernie Burns with Burns Financial and Wealth Management. Good morning to you.
Good morning.
What's going on here?
Well, what's happening is that people are not selling their homes as much anymore. So people are not standing in line for those homes because the factors they're not there very much. So therefore, people don't want to refinance their mortgage from a 3% trying to buy a new home at 8%. So now new home builders are doing really, really well, and those individuals still looking for homes. They understand the interest rates.
Wait a minute, let me unpack this. What you're saying partly is what's going on is somebody owns a home, they might want a nicer home, but they don't want the bigger interest rate on the loan, so they just stay where they are.
Right.
Which means there's a relative shortage of new homes. So now you've got people saying, well, my only choice is to build a home.
There you go, exactly.
Okay, but it's a good little nice bit of positive news, if you will.
It is in a couple of different ways. One, the supply chain shortages have actually been greatly reduced. So therefore, those new home builders, contractors can get their supplies much faster, and these homes are starting to pop up all around the country.
Is there a difference in the home values? Is it kind of across the board, do you know?
No, the average is still around 400,000, but the retirement goals for a lot of these individuals are going to be extended out because these new home buyers are still doing 30 years.
It looks as though interest rates are going to go up a little bit more anyway. It seems
possibly,
like,
yeah.
He seems to be talking about that.
He's hinting towards it, John.
He being Jerome Powell.
Jerome Powell. He's hinting towards it because the fact is that he doesn't want inflation to get out of control again and have to start raising rates aggressively. But the market is priced in one more hike, maybe a 25 basis points, but not the other one.
But from the point of view of Joe Sixpack, if you are in the market for a home, you might look at it and say, well, I can afford it today, let me go get it, or even a house, or a car, I mean. If
you can afford it today, by and large, definitely go get it, because you could always refinance 2 years from now. He's not lowering interest, Jerome Powell's not lowering interest rates this year, but next year they're going to start lowering interest rates again. You can always refinance later, but there are not a lot of them out there, not a lot of homes out there. So if you see something that you really like and you can afford it now, then I would purchase it.
The average age of a car, I think, is something like 11 years now. It's really way up there, partly because cars are just built better than they used to be. When they say they don't build them like they used to, thank God, because they're actually a lot better in that sense. But how do you think interest rates play into all of that?
It looks like the supply chain with the car manufacturers are starting to subside. You're starting to see more vehicles at dealerships locally when you pass by, but they have not completely repaired that issue yet. Supply chain shortages still have issues in the car industry.
And used car prices are still
still up.
A little off the reservation on here,
yeah.
On this, Ernie. But it's really an interesting dynamic. You can get more for your car, but then you got to pay the higher interest rate on what you're going for.
And that's one of the factors that Jerome Powell is looking at. He's looking at, he's looking at unemployment rates. He's looking at salary wages are high, but he's also looking at spending habits of the U.S. government and also the individuals. And that being a factor, if these prices don't start coming down soon on the used car industry and the new automobile industry, he's going to start thinking about rates again.
Interesting. We'll keep an eye on Jerome Powell and the rest of the Federal Reserve.
Yeah.
Ernie Burns, thanks.